Nifty is down about 100, 150 odd points at the day's lowest point, closer to the 7600 mark, down a full 2.5 odd percent, looking in extremely weak. Selling pressure coming in at 3 p.m. sharp, which means that ETF flows maybe have turned negative today. It feels as if the selling would have returned into the market, maybe continues till we get another trigger, either on the upside or on the downside. So probably it looks that the best of the rally seems to be behind, but it could be a false rally. After the RBI event, a lot of people would have positioned themselves for a 50 basis point rate cut, but that has not happened, and now we are playing a catch up with the markets. Let's look at some names that have fallen in the last 5 to 10 odd minutes. So if I look at the Nifty pack and what's essentially fallen in the last 5 minutes, Idea is down about 0.87% in the last 5 minutes, 109 odd levels. SBI is down 0.6 back to the day's low, 184, 185. Kotak Mahindra Bank 0.6% down, 669. This is a name that generally doesn't quite fall. Coal India is down about 0.6. Maruti is down about 0.5%. Bajaj Auto is looking weak. BPCL, from the day's high, it's gone much on the lower side. Day's high was 910. It's down about 0.4, 0.5% from there. Bharti, ICICI, Sun Pharma, some of the other names that are losing out. Mayuresh Joshi from Broking is now joining us this afternoon. Mayuresh, what do you make of the banking stocks and the correction over there? Do you think it's all because of the policy?
Partly again, Pankaj, if you just state the fact that 25 bips was largely factored in, I think the markets to a certain extent had factored that in, and again I think the discounting factor largely is driving down what we are seeing in the markets today. The other aspect again is how the earnings will pan out, because it's just a matter of weeks when banks start reporting the numbers, and largely I think the street is coming back to the point where Q3 numbers will be very, very similar to Q4. So clearly I think the asset quality pressures persisting on bank balance sheets, what happens with credit growth going ahead, how much stress still remains over the next few quarters. I think this uncertainty will have a toll in terms of how the book will pan out for a lot of these banks having exposure specifically on the corporate and SME side. So I think weak set of numbers expected, coupled with the fact that what the market was expecting got delivered. So I think a disappointment on that aspect as well. So clearly I think consolidation in the markets will continue, and it's all boiling down to earnings, which I do not believe are going to be great. So I think the markets are expecting tepid set of numbers coming through for the banking pack as a whole, and that's the reaction what you're witnessing on the banking pack as a whole as well.
Now the focus will shift on earnings, and at least in the near term, names like IT pack would be under focus. Infosys declares numbers soon. TCS would declare numbers. What is your view on the IT pack?
So yes, largely I think the markets will focus on earnings, and it's widely understood that earnings for the better part of FY16 will grow in higher multiples of single teens. So clearly I think markets are getting cognizant that the earnings recovery is going to be slow and gradual. FY17 numbers generally will look better because the base of FY16 will be too low. So I think 15-16% probably for FY17 in terms of earnings growth is not ruled out. Specifically for the IT pack, clearly I think Q4 is one quarter where client discretionary spends are decided. So one really needs to understand from management commentaries in terms of the niche offerings across business verticals, what kind of client spendings are expected to come through. But largely I think the management commentaries have been extremely robust post Q3. Most managements are indicating to the fact that we are not seeing any deviation in terms of big spending cuts come through. Though there not be any expansive increase in terms of spending coming through from the end user industries, you're still going to see decent amount of growth both in dollar and rupee terms. So our own take is that in cross currency terms the growth should be quite reasonable. Volume growth should be as per expectations, specifically for the top tier names. Within the mid-cap pack, I think a lot more has happened in the IT names. Acquisitions taking place, there has been some amount of stake sales happening in a few companies. So I think one must really understand the core business dynamics that these companies offer, the kind of value that equity shareholders are going to take post the announcements that are probably taking place in terms of corporate actions, and again valuation. So I think from a bottom-up approach, top tier names is something that we continue to like over the next 12 to 18 months.
Biocon is up about 6% today. Any view on that? Within the pharma pack, do you like that name? It's been a name which is ignored by the market.
Oh yes, largely ignored, and I think it has been underperforming as well, except for today's performance, specifically in terms of stock price. However, I think 3-4 attributes is something that I'll still keenly watch out for, and therefore the Q4 numbers are going to be extremely important. What happens with the Malaysian insulin facility is going to be a key takeaway. What happens with the CRO sales, I think that's going to be extremely important as well. And again, I think in terms of their core growth, because in terms of their R&D expenses have been quite huge, to say the least. That probably takes a toll in terms of their capex spends as well. So I think with increased capex spends, with expectations of all these facilities starting to contribute significantly to earnings, the return ratios have been quite subdued. So I think Q4 numbers will be very, very interesting to watch for Biocon. I'll be keenly watching out for that. Any positive management commentary over the next year, any developments happening on their core portfolio in terms of the development, in terms of generic approvals, I think all these aspects need to be keenly watched out for Biocon.
Right, you mentioned about banking briefly. ICICI is now down 5.5%. SBI is down 5.5%. It's got to be selling beyond the RBI policy, right? If you know such sort of moves have to come in, because nothing must have changed after the policy.
I think RBI might be just one of the factors for a little bit of disappointment creeping in, because it was largely expected, as I said earlier. But again, I think the focus will now shift over the next few weeks, as I said, and again in terms of core earnings, how asset quality happens specifically for names having exposure towards the corporate stroke SME book. Now, the known fact here again is that the stress will be quite evident in Q4 as well as Q1 of the next fiscal year. But how much is probably built into the price? Because you've seen a lot of stock price movement happen in terms of anticipation of most of these issues probably getting resolved by the better part of FY17. But again, I think one has to contend with numbers before that. So I think Q4, Q1 are going to be a key attributable trend in terms of how asset quality will pan out. And the street will focus purely on asset quality at this point of time, credit growth, how the advances growth happens, probably how NIMs and spreads pan out. I think largely the street will factor that in terms of what base rate cuts have happened over the past few weeks. But largely, I think asset quality pressures persisting, specifically at the end of the corporate stroke SME book, is going to take a toll on how numbers pan out for Q4. The street is very, very skeptical in terms of how they are reporting these numbers. If they're similar to Q3, I think it will be gestated by the street. But if they're worse or off in terms of how the numbers are reported, how the restructured pipeline has panned out for a lot of these players, I think that trend is something that is largely unknown at this point of time. But clearly, I think it's all going to be about asset quality for a lot of these banks having corporate SME exposure.
And you think that's what the market is now starting to price in, the focus more on asset quality rather than policy and rates in the system after the RBI policies behind?
So now the event risk is out, Pankaj, and the governor itself has given a direction in terms of being accommodative going forward. Though I think he's very, very particular in terms of how monsoon will pan out, what kind of implications if the 7-pay commission is given out. And again, I think the quantum and the timing and has to be decided by the central government. So I think all these factors probably are having some mechanical adjustments in terms of how inflationary trends will pan out. But largely it is understood that inflationary trends will be down. It is largely understood that if monsoons are better, the discretionary spending will pick up, which effectively means that the liquidity push that the governor has given by reduction of the MSF, by increasing the reverse repo by 25 bips, by narrowing the corridor to 50 bips, the push of liquidity that the banking system so dearly needs has rightfully been given. Now he'll probably wait for how monsoons pan out, and if they're better, as one really expects from reports, you can expect that the rural discretionary spending and demand will come back. And if that comes back, along with the 7-pay commission recommendations and the implementation thereof by the central government, that is going to have a huge fillip in terms of the consumption trends going forward. So I think the markets are keenly watching all these factors going forward. So I think one must wait and watch over the next few weeks. But till that point of time, I think my clear sense is that the markets is going to consolidate. And there are very few triggers even at this point of time. Results, as I said earlier, I think the markets have just stated that the numbers are going to be very, very tepid. The capex cycle is going to take at least a couple of quarters to revive, specifically on the private part. So I think it's all going to boil down over the next few weeks on some amount of respite in earnings, how monsoons pan out, government spending coming through, and expectations of summer reforms getting through over the next 2 months.
Right. How would you look at something like a Bharti Airtel and Idea? There was some sort of positive momentum into these names, but again, when the markets have cracked, they have gone down. Just avoid the telecom space?
Again, largely I think my call over the past few months has been that telecom will underperform. And the logic here is that with volume traffic increasing, you're actually seeing the volume ARPUs in terms of voice actually go down. In terms of data revenues as well, the data ARPUs actually have consolidated or are going down if you take a 3 to 5 year chart. Clearly, I think what is going to happen with Reliance Jio, and again, I think the launch is getting delayed. I think that has benefited a few players because they're able to expand their network in terms of 4G coverage. But again, I think the kind of spectrum payouts that they've done earlier, the kind of spectrum payouts expected on the 700 megahertz, which is going to be a cash burning exercise because I think the return ratios are going to get subdued at this point of time to recover the kind of cash they might commit in terms of even capex for this current year, both pushing up new towers or pushing up added infrastructure. The call drop case, again, I think that's going to be a big overhang. I think what really happens out there is going to be a key determining trend, at least from a short-term perspective. So I think all these factors, along with the kind of leverage that they've got on their balance sheets, is not going to aid the return ratios. So I think my call largely is that over the next 2 to 3 quarters, to say the least, these stocks might underperform. The risk caveat being, if something positive probably comes out from the call drop case, you've seen some positiveness happening from the spectrum user charge, which has actually come down from 5% to 3%. So I think some positives are getting built in, but largely I think the street is working on all these other factors which can create an overhang onto these stocks from a short to medium term perspective.
Mayuresh, just stay on with us. We're taking a break. We're coming back into markets at the day's low around the 7600 mark. In fact, now trading below that. The last tick is of about 5-6 points and it's taken the markets below the 7600 mark at the day's low. Coming back in 2 minutes with market closing on the other side. Sensex down about 500 plus points, not looking that good. Nifty below the 7600 mark, 5-6 minutes remaining for closing, and it looks that we may close below that level. We were talking to Mayuresh, he's still with us. Avinash Gorashkar is also now joining us this afternoon. Avinash, good afternoon. Just wanted to ask first, what do you make of this sell-off, Avinash? You think such sort of sell-off is warranted after the RBI policy, or it's just a global catch-up that now Indian markets are doing?
No, I think, Pankaj, both things to be considered. I think, markets were expecting possibly the moon from Mr. Rajan, I think a 50 basis point cut. And I think that was definitely not coming. So, despite the fact that, even if a 50 basis point would have come in, I think markets would have obviously digested it and then, probably there could be a sell-off. It typically seems to be a situation of, buy on rumors and sell on news. And clearly the global sell-off has also contributed to the downtrend. My sense is the fall has been pretty sharp, and I think in certain cases especially has been led by most of the rate sensitives, the banks, real estate, the autos. So I think whatever had gone up in the last 2 months, especially after the budget and giving hopes that there could be a big rate cut, I think clearly a 25 basis cut has disappointed the markets, but that's not the end. In fact, today's commentary from the governor clearly says that if the situation warrants, another 25 basis cut can definitely come in. I think going forward, I think the markets would now look at corporate earnings for the fourth quarter and obviously how the monsoon progresses. I think these would be two elements which would actually drive the markets going forward, and today's sell-off seems to be a little more harsh. My sense is we will probably see some stability happening in the next couple of days, but this kind of sell-off definitely negates the entire euphoria which we had seen post the budget.
Right. Mayuresh, as far as monsoons are concerned, do you think monsoon prediction will be an important trigger for the markets? We spoke about earnings earlier.
The monsoon is going to be a determining factor, and again the government has, the governor probably has laid hopes on that as well. Again, I think historically proven, I'm not any monsoon expert, there are no 2 consecutive droughts and a third drought does not follow that. So clearly I think if the monsoons are better, it does drive rural discretionary spending, it does drive rural discretionary incomes as well. Add to the point, Pankaj, as I mentioned earlier, I think the 7th pay commissions are going to be extremely important. I think the timing and the quantum, the government probably will decide at this point of time. And yet I think the arrears element is missing this time around. I think whatever probably comes through, along with good monsoons, I think is going to abet the consumption story, specifically on the rural side for India.
Right. Avinash, what should one do? A name like Eicher Motor is down 4%. It declared the March numbers. All the 3 months numbers were very, very good. It's an expensive stock. It's a stock from the Nifty now, but has continuously delivered. Would you buy into this fall of 5-6%?
No, I think if my view is, at least for the next 12 months, Pankaj, definitely it's a quality blue chip. I think if you see the kind of Royal Enfield numbers which, Eicher has been throwing up, my sense is I think there doesn't seem to be any slowdown, especially in this kind of segment. Although, Bajaj Auto has also indicated that possibly they also have a Royal Enfield in the making. But clearly, in terms of market leadership in this segment, my sense is, even in the commercial vehicle business, a strong double-digit volume growth has been seen. So I would not be surprised that, these are the kind of blue chips one has to actually accumulate and build a portfolio. I think keep a time horizon of at least 12 to 18 months because obviously these are high price counters. But clearly in terms of dividend, in terms of the return on equity, in terms of all financial parameters, this looks to be quite attractive.
Right. Mayuresh, quickly your view on Eicher Motors?
So remain optimistic on the counter as well. And as Avinash was mentioning, Royal Enfield has held up pretty well. The margins are pretty strong as well, in excess of 26-27% odd. And though I think the discounting levels on the CV side of the business are pretty high, I think the peak off in terms of discounting levels should probably start happening in this quarter and the next. Along with recovering volumes on the CV part, the consolidated numbers look much better. Even the engine part that Eicher Motors supplies to Volvo, I think even that business is doing reasonably okay. So in my opinion, again, Eicher is a qualitative stock. I think investors holding on to Eicher should continue holding on.
Right. Mayuresh, Avinash, just stay on with us, about a minute remaining for closing. Not that great day if you're a bull in the market. 160, 170 points decline, 7,592. 2.5% decline, 550 points on the Sensex. Yes Bank down 5% odd to 828. ONGC down about 0.8. Kotak Bank down about 3.5. NTPC down close to 3%. Tata Motors down about 5%, 272. Sun Pharma down about 1.8. Lupin down close to up about 0.25%. Infosys was one of the top losers, did put a lot of pressure on the index, down 2%. Aurobindo Pharma 748, Reliance Industries down about 1%. Ambuja Cement down 2%, L&T down about 3.5%, HDFC Bank down 1%, Z Entertainment down close to 2.5-3%. Tech Mahindra was one of the losers, down 1.7%. IndusInd Bank was down 1%, Bharti Infra was down 2%, GAIL was down about 2.5%. HUL down 1%, 864. Bharti Infratel down about 2%. That's the closing bell. 167, 168 points as far as decline for markets is concerned. This is of course the provisional close, but I don't think that the adjusted close would really have any meaningful changes. Dr. Reddy's down about 0.3, Hero MotoCorp down about 1.5, Ultratech down about 2%, 3,100 odd levels for Ultratech. Grasim down about 1.3, 1.4 odd percent, 3,826. Bosch down about 1.8, 19,700 for Bosch. ICICI was among the top losers, down about 5.5, 225. Axis Bank down close to 3%, 431, 432. Tata Power down about 1.4, 67 odd rupees. Axis Bank, Tata Motors on your screen, 370. ICICI Bank down 1.3, BHEL down close to 3%. Coal India down 3.5, Tata Steel down 2, Adani Ports down 6%, 226. I think Adani Ports would be the top loser in the Nifty pack, 6.5% decline. HDFC down about 0.25%. Adani Ports is the top loser, 6.5% decline. SBI was down 5.5%. It was 192 when the policy came out. ICICI Bank 5.5% decline. Bharti was among the top losers. It has been among the gainers earlier, but today was a loser. Bank of Baroda 145, 143 towards closing. Tata Motors, DVR both among the losing side. DVR was down close to 5%, 271. Tata Motors was down about 4.5. Yes Bank down 4%, 828 for Yes Bank. Hindalco, Tata Steel, some of the metals pack also did lose out in the day. Eicher, we just spoke about that. That's a name which was down about 4.5-5 odd percent. Very, very weak even for the large cap names. A very handful of gainers. That also was significantly off the day's high. So a Lupin, a BPCL, a Power Grid were among the top gainers. BPCL was up 0.65. HCL, I think, came up in the last hour of trade in terms of gainers. Power Grid was up about 0.25%. Let's go back to Mayuresh as well as Avinash. Avinash, any view on Tata Steel? Would you be a buyer after the 5% fall today?
I think in fact, Pankaj, what news reports have been coming out is that they have reportedly found some buyers for their UK units. I think once the UK unit is sold off, I think to a certain extent, the debt as well as the earnings kind of momentum would be more positive. Probably we'll have to wait for a couple of quarters, but I think whatever weakness we saw in the Q3, probably the fourth quarter may not be as bad as Q3. So probably, I mean, I would definitely be a buyer with a longer term perspective, even looking at a 12 to 15 month horizon.
Right. Mayuresh, how would you look at Tata Steel?
No, again, I think the sale of the business is going to remove the bad asset from the book. How much impairment they probably take if the sale probably does go through is one important aspect to be looked at. On the domestic front, I think the volumes are catching up with the new commissioning at Kalinganagar with the high iron ore inventory that had got accumulated over the past few quarters, getting over probably in this quarter. You're probably going to see much more expansion in terms of earnings for the domestic operations for Tata Steel. So the move is going to be positive from a longer time horizon. However, from a medium time horizon, my own take is that it will still keep on struggling, because for a genuine demand recovery to come back is going to take some amount of time. Realizations might improve with the imposition of MIP, safeguard duties probably done on the domestic side, but a structural re-rating will only happen once the demand pickup happens, which will get reflected in pickup in volumes, and that I do not foresee happening at least for a quarter of two. So I think there will be better entry points if one is looking within the steel sector for Tata Steel particularly. So I think numbers are going to be extremely key and crucial for this quarter for Tata Steel.
So after the recent run-up, just avoid the name?
Yes, largely I think you need to wait for numbers to come through, wait for the management commentary there of how they are perceiving the industry as a whole, what they're probably expecting in terms of demand catch-up happening for the domestic business, because international business is largely now getting factored that if the sale does go through, I think it is going to be a more domestic-driven operations at this point of time going forward. So clearly, I think what happens with numbers and the management commentary thereof is going to be extremely crucial and critical for Tata Steel.
Right. How would you look at Tata Motors from the same group?
It's been a hold. I think it's been one of my favorite stocks, and the way the numbers are panning out ex-China, I think it's been a very encouraging trend. The new introduction of new platforms, the consolidation of platforms is going to help them in a big way going forward. The domestic MHCV industry is picking up. The volumes are evident and testimony to that fact. So I think if you look at China, I think the street has factored in slower growth happening, not just for this quarter, but for the next 2 to 3 quarters as well. There might be some amount of compression happening in terms of the margins, both because of the Chinese effect as well as the new launches, which will have some amount of increased spending, both in terms of advertising and promotion. And again, I think there will be a few added depreciation expenses happening as well as amortization on the balance sheet. So I think the street is factoring that in, but I think the numbers ex-China have held pretty well. The new platforms are going to abet Tata Steel's fortune in a big manner. So I think I remain optimistic on that stock. It's a clear hold from my side.
Right. Avinash, how would you look at Tata Motors?
I think, Pankaj, if you see the kind of momentum in JLR numbers, especially US numbers have been a record high. I think if you leave alone China, other markets like typically like Europe also have done well, UK has done well. So my sense is I think definitely this seems to be a good long-term story, and I think one needs to also look at Tata Motors DVR, because now it's an index stock. Clearly, here the discount to the front line is pretty significant, and our sense is that over a period of time, this is one DVR possibly stock which possibly could get more appetite, not only from retail investors but even from the institutional investors. But clearly FY17, one could look at stronger earnings, and to that extent I think it looks quite undervalued in the auto pack.
Right, but it's done pretty well, and the regions that you mentioned which are leading to recovery have, I don't have very great margins. Still, you think if volumes increase, incremental profits grow, the stock can continue to re-rate?
No, I think clearly, I think despite the fact that margins may not be as attractive, but clearly, if the volume growth numbers continue to be sustained, I think that is what the market would also obviously like. That would be a big sentiment booster. And I think clearly at the end of the day, I think auto is a volume driven business. So clearly maybe in the luxury segment, margins could come under pressure. But I think considering the fact that some more new product launches are expected in FY17, I think it could be a mix of volume and luxury, Pankaj. So clearly, I think definitely volume growth at this point of time would be a more important determinant.
Right. Avinash, how would you look at Dish TV? Recently, all of these players have taken price hikes. Q3 numbers were not good, and there has been a rally, and now we have seen a good correction. Would you buy into this name?
No, I think from a longer term perspective, definitely, I think as you rightly mentioned, Q3 was not a very good quarter. Some disappointing trends especially came on the subscriber additions. So I think hopefully in the fourth quarter, if the subscriber additions are slightly robust, the average realization also is pretty good. So I think both in terms of the number of subscribers as well as the margins, my sense is over the next couple of quarters, you could see significant good improvement, plus the kind of penetration, clearly the digitization space has done. My sense is probably you will see some more improvement coming in from the first quarter of FY17 also. So clearly from a longer term perspective, 6 to 12 months, definitely this looks to be a good value buy.
Right. Mayuresh, how would you look at Dish TV?
No, realizations have probably consolidated with the increase in packs. I think the realizations per user will go up. The regional offering Zing has done reasonably okay. I think what is disappointed probably is the ARPUs. And again, I think with the digitalization trend picking up steam, the expectations are largely laid out that Dish might do pretty well. However, one must understand that a large part of their expense in terms of content costs are not out for renewal, at least for the next 15 months. So there is some respite on that part in terms of their content-led expenditure, which forms around 1/3 of their total spend for generally for satellite or dish companies. So clearly, I think this stock is one where expectations are highly laid out. Whether they deliver or not, I think numbers will do the talking. But I think media space, specifically the broadcasters, is something that I'm very, very bullish upon at this point of time.
Mayuresh, thank you so much for taking out time for us. Always a pleasure talking to you. Avinash, I just want to ask about a couple of more names that I had spoken to Mayuresh about.